I always get asked all the time about my opinion on commodities, especially crude oil and even precious metals like gold and silver. I get asked if I believe crude oil is going up or down, or if we should buy ExxonMobil, Chevron, or Occidental. And I also get a lot of questions around precious metals, if maybe, Barrick Gold is the best miner, is it Newmont? Or what do I think about precious metals in general? And I'm personally extremely bullish on commodities and extremely bullish on precious metals like gold and silver, but I have a different way to actually express my thesis in terms of my investments. There's two main ways to invest in commodities and precious metals. Most investors, they actually go the first route, but there's a second route to actually invest in precious metals and commodities, crude oil, with much lower risk, and I explain all of that here in today's video. Now, the first way to actually invest in crude oil and commodities, even precious metal, is to actually buy the producers or the miners. Something like ExxonMobil, Chevron, ConocoPhillips, something like Pioneer, Natural Resources, Occidental Petroleum, Marathon. Most of you know them. So a lot of people, for example, they are bullish on crude oil, so they buy ExxonMobil. And I actually used to do that. This is pretty amazing. I even did that in March 2020. I bought Royal Dutch Shell, and I also bought ExxonMobil whenever we had the COVID crash, and I was pretty bullish on oil back then. Or a lot of other people, they buy the miners. They buy something like Barrick Gold because they believe gold is going up. Or maybe Newmont, they are betting on the price of gold going up, so they tend to go buy either the producer in terms of crude oil or maybe the miners in terms of gold and silver. And there's one massive risk with this strategy, is that you could actually be right on your thesis. You could be right on gold going up, but if you buy the wrong stock or the wrong miner, you could still lose money. And this is an amazing example with Newmont and GLD, which is gold pretty much. Now, in this period last year, if you were bullish on gold, if you had a thesis that gold is gonna do well, you was actually right, because gold went up 15%. But if you went and you bought Newmont, you actually lost 5.7% if you bought Newmont. Now, why is that? Many of you would be wondering, why would you lose money with buying miners if gold itself is going up, which means Newmont should actually make more profits if gold is going higher. It makes perfect sense. But the biggest risk that a lot of people don't factor in is actually the inflationary risk, the risk of the cost per ounce to actually mine this gold. And what happened in this case, that gold actually went up 15%, is pretty amazing. But the cost per ounce to actually mine the gold went up much, much more, because we had commodities go up, we had a lot of labor inflation, which actually shrinked the margins of Newmont and Barrick Gold. I believe the cost per ounce of Newmont, I believe it's around $1,300 an ounce. This is very, very high. It used to be like $1,100 if I remember correctly, and now it's between $1,250 to around $1,300. This is very, very high. So gold did actually go up, but the cost of mining gold went up also, which actually decreased the margins. And this is the biggest risk that a lot of people don't factor in whenever they are investing in, crude oil. Even cost per barrel for a lot of the producers went up. So even though maybe, crude oil is going to go up, but if the cost to get the barrel goes up also, maybe their margins could actually shrink, and you might even lose money in this case. And it's very, very cyclical in terms of the miners and in terms of something like ExxonMobil and Royal Dutch Shell. Now, there's a different way to actually invest in precious metals and crude oil and commodities, copper or any commodity in general. It's much, much safer, and this is actually investing in an industry or in a business that an idiot can run. And this is what Peter Lynch said. Peter Lynch said, go for a business that any idiot can run, because sooner or later any idiot is probably going to run it. Pretty amazing quote. And one kind of area in terms of the precious metal space, the commodity space, that any idiot can pretty much run, it's actually the royalty companies. Now, a lot of you might actually be familiar with the royalty business models and royalty companies, but I have a lot of newer investors on the channel that are not familiar with the concept or the business model of royalty companies, which is why I'm going to give you some examples within crude oil and precious metal of royalty companies. I'm going to explain to you why I personally mostly invest in royalty companies instead of the producers. For example, if I'm bullish on gold, I tend to try to go for something like a royalty company within the gold space or a royalty company within the crude oil space, which I actually own. And one amazing example actually of one of the most popular one amongst the crude oil space and natural gas and stuff is actually TPL, Texas Pacific Lands. Most of you are familiar with this stock because I talked about it in 2021 and we made like 45% in 3 or 4 months, and I took profits a little bit early. But an amazing example is actually TPL, which is Texas Pacific Lands. Now, Texas Pacific Lands own the lands in Texas, and on this land you have operators like Occidental, Chevron, and ExxonMobil that they are actually drilling for oil or natural gas or whatever they are trying to do on TPL's land. Now, because they are doing it on TPL's land, they have to pay TPL royalty and streams for actually doing so. It's like some kind of a rent lease, some kind of a ownership, like a triple net kind of thing, but with commissions. If you want to think about it this way, it's actually much better. I'm going to explain to you why later in the video. But this is how TPL gets paid. You have the producers like Occidental, Chevron, and ExxonMobil. They are drilling on TPL's land, and TPL collect royalties. Now, the best part about it is that ExxonMobil and Occidental, they are facing the inflationary costs. They are facing increase in labor. They are facing increase in cost per barrel or whatever it is. They are facing those costs. But TPL is not facing any cost. It's pretty much immune to inflationary pressures. It has a pretty amazing income statement. If you're a newer investor, you could go read, have fun with TPL's income statement. It's very, very easy to read. They pretty much have very little to almost no expenses. You could look at the gross profit margins, 97% gross profit margins. I mean, I would dare you to find a tech company or Nvidia or any companies that people are excited about with 97% gross profit margins. This is the royalty business for you. Pretty high margins. You look at the net income margin, over 66.8%, 66%. Net income margin. I mean, it's pretty astonishing. Even Visa doesn't have 66% net income margin. And this is a royalty business for you. And I'm going to show you actually another example within precious metals. I'm going to show you even why, a better reason of why, I really like royalty companies and why they have been such amazing compounders over the long term. This is another extremely popular one within the precious metal space. It's called FNV, which is Franco-Nevada. Again, if you're more of an experienced investor, you might have heard of Franco-Nevada, but it's the same business model as TPL. Franco-Nevada owns over 430 assets. They own the land, and you have a lot of the miners like Barrick Gold, like Newmont, or like New Gold or something like that. They go and they want to mine gold on the lands of Franco-Nevada. Now, these kind of miners, they are facing the increased cost per ounce. They are facing increase in diesel cost. They are facing increase in labor cost. But Franco-Nevada is actually not facing that, and they are collecting royalty and streams from those miners that are actually mining on their own land. Pretty amazing. Now, this is the best graph I can show you of why the royalty business is one of the best business models in the world, pretty much. This is the reserves of Franco-Nevada in 2007. It was around 1.2 billion. Now the reserves have gone up over 2.1 billion. So they pretty much went up 3.5 times from 2007 to 2022 without having any increase in cost. Now, the main ways they were able to 3.5x their gold reserves was because you had a lot of the miners, again, like Barrick Gold or Newmont, maybe they were mining on FNV's land. Now, a lot of those miners, they actually do discoveries. They go and they try to discover new gold. Now, if they discovered more gold assets on Franco-Nevada's land, something like Barrick Gold, they have to put in the CapEx to build up the mine, to build up the capacity so they can extract the gold. Barrick Gold puts in all the CapEx to extract the gold. But if they are extracting more gold from Franco-Nevada's land, they have to pay Franco-Nevada more royalties, which actually increase the reserves. This is just an amazing business model. This is why TPL has such high return on invested capital, because they are not putting in the CapEx to find more oil or to find more gold. The producers do all that stuff. And if they find more gold or more oil or more natural gas on TPL or Franco-Nevada's land, they're gonna collect more royalties without without putting up a single penny. This is why, I mean, it's one of the best business models in the world. Pretty amazing stuff. Again, very high margins, over 54% net income margins for Franco-Nevada. Now, the biggest challenge with a lot of the gold miners, a lot of, especially royalty companies, they are expensive. So you have to be willing to pay up for quality. And in my experience, the best way to buy them is whenever they're trading below the 10-year average. I mean, you're normally getting a good deal. Also, you have to look at where, gold is actually trading at, but you have to look at that stuff. And one of the best ways to actually learn more about, royalty and stream companies, gold miners, a lot of precious metal miners, I would highly encourage you to actually go, and even people, they don't know it exists, but Rick Rule, which, I mean, most of you are familiar with him, he's a pioneer in commodities and precious metals. He actually has a playlist, it's called Rule Classroom, and he teaches you about royalty and stream companies, how you should value them, how you should think about them, more around miners and developers, and, a lot of amazing stuff for free. So you could maybe go look it up, put up Rick Rule, royalty companies, and you're gonna get the playlist. It's pretty amazing stuff. It's gonna be very, very helpful. But I have one idea suggestion that I talked about before, and this is if you're somewhat of a value investor or a deep value investor, and you want a royalty company that's trading at a massive discount with a lot of bad sentiment. I mean, I would personally prefer something like Sandstorm. I talked about it before. I have some videos. You could look up my name with Sandstorm Gold. It might come up because I have it within a series of 2 undervalued stocks. And I've been in and out of Sandstorm many, many times. It's a very tradable stock. It's extremely undervalued for good reasons. It's not the best management. It's not the best at all. And the same thing with TPL. TPL has been facing some management issues. They were trying to dilute 50% of the shares or something crazy. So you have to be careful whenever you're looking at that stuff. Even though an idiot can run them, you still have to look at the management team. So I hope you enjoyed this video. I hope you learned something. You got some ideas. It was not financial advice, of course. Thank you for watching the video. I really hope you enjoyed it. So if you did, please press the like button and maybe consider subscribing. So I hope to see you in another one.